Okay, good morning everyone for today's financial hearing with Clas Ohlson. I also like to welcome everyone participating via the webcast and telephone conference. Moderator today is Andreas Lundberg from ABG Sundal Collier. He will be back later and lead the Q&A session. But I now hand over to the CEO of Clas Ohlson, Mr. Klas Balkow. Please go ahead, sir.
Thank you very much, and of course let me also welcome you to our Q1 report for the fiscal year 16-17. For you who were here in the beginning, you saw the film from refurbishment program we've done in Helsingborg in Väla. I must say it's been an extremely positive experience in terms of when we moved that store and opened up in a new location in the shopping mall and then started trading, and it's been very, very positive. But let me now go into the financial report. If I directly go into the agenda, I will cover and go through some of the key ratios for the first quarter. We'll also inform you about the events that have happened after the quarter. And today I will mainly focus when we do the update on the strategic priorities on our expansion update, as we have a lot of activities going on in that area at the moment. And then finally, Andreas from ABG will come and lead the Q&A session. Before going into the key ratios, just let me give you a quick overview of our current position. We have at the moment 207 stores in 6 countries. We are at the moment at a rolling 12 turnover of a little bit more than 7.6 billion Swedish krona, and we are continue to be one of the strongest brands in the Nordic market. Now, moving into the report and into today's session, let me give you just a few highlights of what we're about to present. Clearly, when we're coming into the sales levels, we are seeing a somewhat softer sales than we're used to see in this summer. But there are also some clear explanations around this. There are summer months when we tend to see summer months variations, and we also seen that this summer, and I'll come back to that in a little bit more details. But also currency that it impacted our sales levels. And the currency situation has, as expected, led to some margin pressure as the Norwegian krona and the difference versus the SEK there versus the Swedish krona has given a direct impact. But we also taken important steps on our international agenda. I'll come back to that, but the UK program we are working on is going really good. We are now announcing a new store in Dubai, and of course I will give you some more comment about the first month's trading in the first store we've opened up in Hamburg. And finally, we have to say that we've had a really good start in the second quarter as we are reporting a 10% sales uplift in local currencies in August. Now, let's go into the key ratios for the first quarter that for us covers from May to July. Again, the sales has been flat. It's up 2% in local currency, pressured then by currency impact, both from the pound, but also from mainly from the Norwegian krona. We are reporting a -1% like-for-like, and with somewhat a negative calendar effect, and again, coming back to the summer month variation. I also would like to remind that we're also meeting somewhat higher comps. We have had the last 2 years, first quarter has been an uplift of 4% respectively. So it's been we are meeting somewhat higher levels. But I'll come back to more of that when we go through some of the details by market. In the quarter, we've also closed 2 stores as planned in the UK, and we open up 4 stores. Obviously the Hamburg opening, and then we've also opened up 3 more stores in the Norwegian market in the quarter. Looking then into the share of sales by market, due to the UK restructuring as well as some currency, we have a slight change now versus what we've seen last year in terms of sales share per market. Norway slightly down from 39 to 38% share. Outside Nordic also slightly down from 5 to 4. Finland and Sweden is up 1% respectively. Finland now is now representing 11% of share of sales. As you know, we continue to strengthen the Finnish business. But Sweden is still the largest market, and we are, if you're looking at and then going into comments market by market, we are still seeing a stable consumer confidence in the Swedish market. We're also seeing, at some time now, a strong retail market, even if we're now seeing somewhat a slowdown in Sweden the last quarter and the last month. For us in Clas Ohlson, we noted a 2% growth in the quarter. And here, coming back to then the summer month variations, where we had a May and June that was at an absolutely okay levels, growth levels, while July was very soft. And then I need to remind us all that last year's July, we had a 12% growth in Sweden. So you have these kind of large swings in the summer, and as we are also breaking our quarter, this could happen between the different quarters. I'll come back to some of that as well. But we have a solid and strong position in Sweden, and we continue to develop our concept according to our plans. Norway confidence, which we are pleased to see, seems now to really bounce back from, as we have seen from some time now, somewhat softer levels, but it's been clearly bouncing back the last period. And also that is followed by the retail spend. For us, when we look at our turnover in Norway, we are reporting a 3% growth in local currency. However, we're also reporting a -4% in the Swedish krona. So you see the currency impact that we have, that which is fairly large. But also Norway have had a large variation month by month during the summer. May was actually down 6%. Now, if you go in a bit more into details in May in Norway, you also see that you have some calendar impacts there. You have May 17th, that you know is a big day in Norway. That last year was on a Sunday, this year was on a weekday that we are not trading on. So there was some variation. The positive that we have seen in Norway is particularly that both June and July is really going in the right direction, and July was very healthy despite also a negative calendar effect in that month. Finland, pleased to note that also in Finland the consumer confidence is now continuing in the right direction after some years now with some soft development, and also starting to see now more and more and better retail trading. Even if we have had of course that is positive, even if we have had a positive trading over the last years in Finland, and we continue to see that also in this quarter. We have a growth of 5% in local currency, 6% in Swedish krona, but we are clearly strengthening our brand and position in the Finnish market. And if you just look at the graph here, you'll see that if I look at the last 5 years, we've actually grown over 45% growth over the past 5 years, quarter by quarter. So clearly a step in the right direction in Finland. Now, outside Nordic is a mixed view. We have a positive start in Hamburg. We also have a positive trading in Dubai with our franchising partner there. Looking at UK, sales there is clearly influenced by the weak currency, but also the store closure program that we are in the middle of executing. But also adds some kind of uncertainty related to the Brexit. But I'll come back a little bit more in detail when we're talking about the international plans. I'll comment more about these countries later on in my review. Moving then on to the gross margin, and again coming back then to the currency effects. We are reporting a gross margin at 39.1%, which is down 1.3% versus last year. And then recalling. A couple of years ago, we also had the large dollar change and the dollar impact on our gross margin that has some time lag, and I must say that we fairly successfully been able to balance these effects. Now we are facing the change in the Norwegian krona that has a more direct or instant impact on our currency or on our gross margin. If you're looking at the ratio, and I'll put another slide here, you'll see some of that. From last year we have an average NOK on 107. This year we had it on 100, which means it's a 7% change. And in addition, as you know, we are hedging our Norwegian krona 6 months ago, and when we hedged, we were at somewhere 0.95, 96. So we are actually having negative hedging effects in this quarter. But on a positive note, which I think is clear to see also on this graph, that the Norwegian krona is actually now going in the right direction, which we think is good. So currencies, as it was with the dollar, we see some short-term impact, but we are confident that over time and long term we also will be able to balance the Norwegian krona impact. Going into the ratio of share of selling expense, it's somewhat up as planned, and as communicated last quarter, we have had the startup cost for the Hamburg or for the German launch of 15 million SEK that has impacted the share of selling expenses. But also, of course, we are affected in the kind of a more softer month or softer quarter in terms of our sales. We are affected by soft like-for-like sales. On the positive note, we have in the quarter also continued to work on our efficiency measures, so we are more or less balanced the impact from the like-for-like, but obviously we have the German cost, the startup cost is in this quarter. So, as expected, when noting the Norwegian krona and the currency impact and also our planned German startup, our profit is down to 75 million SEK in the quarter versus last year 106 million. Moving into the investment and our investment levels, we are in line with what we have invested over the years, over the last 2-3 years. In this quarter, it's very much related to, we continue to do the IT investments, but also related to 4 store openings and also the program we are currently doing in terms of refurbishment. Again, coming back to the film you saw from Helsingborg, kind of was one of the 3 refurbishments we have done this quarter. We have a strong financial position. Cash flow, even in this quarter, is to a large extent impacted by inventory buildup, which is mainly related to the autumn range and to some of the campaigns that we're building up. We'll comment that more when we're coming into August. But clearly we've had a somewhat build up on inventory that has impacted cash flow and also somewhat softer profit as well. Looking into the net cash position is really at healthy levels at 495 million SEK end of period in our net cash. Leads to then that, as we have shared previously and announced that the proposal to the AGM that we will have now on Saturday is to increase the dividend by 10% to 5.75 Swedish krona, which is then again up from 5.25 Swedish krona last year. As I started in my highlight for the report, we have large variation between the summer months, so it's also fair to see that and to take that into account when we're now looking into what have happened after the quarter and looking into August. As we are pleased to report that we've started the second quarter in a very positive way with a 10% uplift in sales in local currency, 9% uplift in Swedish krona, really healthy growth in the Nordics, which is we are positive to note, and as of course you can see Finland is really again continue to do fantastically good. Outside Nordic we are continue to be impacted by the UK restructuring program as well as we see it some soft overall UK trading, but I'll come back more to UK later on. In conjunction with this, we must also say that we are very pleased with the start of the autumn range. Now you are in this store in Drottninggatan, and I hope you have a time to take a tour later on. The stores are now full with a lot of new products, a lot of new news in terms of smart products. We are continue to add on our private labels. We are continue to add on more sustainable products, particularly now building up for the autumn range. And we had a really positive start. So that was more related to the quarter, as well as some comments what have happened after the quarter and after the period end. So let me now go in this time in the update, in the strategic update, to comment some of the plans and some of the activities we have related to our expansion. And first, before going into each of the market, let me just give you a comment in terms of how we look at our omni-channel and how we look at our sales channels, as we are, of course, also expanding, not only in markets, we are looking into how we are developing our overall business. And just a quick comment, I must say that when we are looking at the structure right now, I'm particularly pleased with the development that we have on our e-com platform, that we're really having a healthy growth on e-com. As you know, that is a clear trend in the market in terms of driving digitalization, and we're seeing now the customers is using Clas Ohlson, we have had several awards for our e-com platform, and we are now seeing a lot of our customers is using our platform to go in and shop and pre-shop towards the stores, but also we have a good trading uplift on our e-com platform at itself. I also must say that our new investment and our new steps we've taken in the B2B business, the business to business with Clas Office, continue to develop really nice. Last quarter, I reported that we have increased the number of B2B customers from slightly below 30,000 customers now to above 65,000 customers, and that continued to grow, and we continue to see a healthy business in our B2B segment, which of course, even if it comes from small levels, it starts it really growing, and it's also a good platform for future growth for Clas Ohlson. Then by market, first UK. Going into the UK, and let me then first comment of the steps we've taken with the new smaller format in the London area. As despite the Brexit uncertainty, we are month by month seeing very positive growth on these stores. We're also working on the stores very actively. We have they are smaller stores, as I'll remind you of, and of course we are working on the density in the stores. We are changing the range. We are also adding more SKUs into the range. We are working with combination in an omni-channel format with an e-com to pick up in store and so forth. So there's a lot of activities. We are not year-round yet, so I cannot make any comparisons versus last year, but month by month we are taking positive steps. Secondly, the restructuring goes in line with our plan. We have closed 2 stores in the quarter. This week we have closed Doncaster. We are also announcing today that we are going to close the store in Leeds later on this autumn. And then the rest is according to what we planned earlier on. The Croydon store will be closed later on, but the date to be confirmed, and due to that is due to the whole shopping mall is being refurbished. So date is very much related to timings on that one. Watford's to be closed at latest in March, and then there's one more store that we are still in negotiations with, and I'll come back to that when that is done. Looking further south, just a quick comment about Dubai. The store that we have there in the Mirdif shopping mall is continued to develop positively, and we are now pleased to announce that our partner there has now signed the second store contract that will be also in Dubai in the Mercato Mall, which is also a fairly large shopping mall. And we are planned to open up that store in November, already now getting that this year. Then the biggest happening for us this quarter has obviously been the launch in Hamburg in Germany. I reported some of that last quarter. We show you some films and some of the activities we have done to build up the first store. The first store then in Jungfernstieg in the middle of the city of Hamburg city. So what can we say of trading? We're not announcing any specific store in terms of trading levels, but let me just give you a few comments of what we've seen so far. First of all, one of the key important when we're looking at and open up a store is of course conversion. How are the customers coming into the store? How are they converting? And I must say that we have seen a very positive start. We're still not up at Nordic levels, but we are significantly better on conversion rate versus when we open up our first stores in the UK. Also pleased to note when we're looking at how are the customers shopping, and already now the average ticket value is on positive levels. We're almost in line with what we're seeing in Finland, which of course we see as a positive start. I must then also comment in terms of how customers are viewing the range. As you know, we have a wide range, and when we are looking at how deep the customers go into the range, it's also a positive signal as they are really in depth into the range. It's not only the easier shopping or the campaign activities, they are really in depth into the range. And then my final comment is regarding our private label. As you know, we have worked on our private labels in terms of quality, design, and price position. And it's, well, the easiest word to say, it's been a fantastic start with our private labels in the Hamburg store, which of course is positive that the customer likes the brand, and they also like the products that we are providing uniquely. So we are ready for the next step now in Hamburg. Next week we will open up the doors for the second store in Altona, and that plans to be open up September 15, next Thursday. We're also then going to follow up with an e-com platform to be launched later on in the autumn, as well as we'll open up the third store in the large shopping mall in Alstertal, and we plan to open up that prior Christmas. So let me now sum up the presentation and sum up particularly maybe the first quarter. Yes, it's been a soft sales in the quarter, but again, coming back to the summer months variations, and also you see in that, and that's fair to say, that you also have kind of a bounce back in August. Profit impacted by currency and also impacted by the startup cost. And of course, we are pleased to get started with a new autumn range and having a positive start in the second quarter, and have a lot of energy for moving forward. Andreas, I think that covered my first part of the presentation, and welcome you up here on the stage, and then you will lead the Q&A.
Yeah, thank you. My name is Andreas Landborg. I work with ABG in Stockholm. If I start with a longer term kind of question, if I go back to 05 or 6 or 7, you had I think a gross margin of some 40% and an EBIT margin of 13-14%. And today you have a somewhat higher gross margin. I guess it's coming from positive mix effects and supply chain efficiencies and so forth, while your EBIT margin is at some 8% in the last 12 months or so. Sure, you have, so to say, entered new markets, but what would you say is the key drivers of this long-term development in the company?
Well, you should also add that we are almost double the volume with our sales in this period. But of course, it's if you're looking at the development, we are continuing to grow. But also, it's fair to say during this period, we've seen a lot of activities in the market. For ourselves, we have taken, as you pointed out, investments that to go out on an international arena. That is having a short-term impact on our margin, but gives a long-term opportunity, obviously. In the markets, I think we've never been stronger in the home Nordic markets. You see now Finland is really doing well. Norway and Sweden has never been stronger in that perspective. But also seeing from a margin point of view, and I tend to comment that when you are growing and when you are taking steps in your store network, At that time, we had 5 stores in Stockholm, as an example. Today, we have close to 20 stores in Stockholm area. And of course, from a just pure percentage point of view, you are also getting some internal cannibalization, and you're getting an impact on that. So it's been a different competitive activities out there. We have seen a financial crisis, but we're also seeing how we are strengthening and putting up more stores and protecting and developing our position that have had some impact on margin, but we're also strengthening our position. So if you have just one store here, of course, that's coming back to the Gallerian store that we had some years ago. At that time, we only had one store in the city. Now we have more stores, and we are significantly stronger in this area today, even if we have shared some of that great margin that we saw in that store.
But how do you balance, let's say, growth in new markets versus, your core markets, where obviously your cash flow is strong, margins are strong, and so
Well,
forth?
I think we are balancing, we are strengthening, we have developed, and we really developed ourselves. We are more or less doubled the volume, doubled the sales over this period. So we have strengthened ourselves in our home markets, but we're also taking investments, but also balanced investments in an international arena. Coming back now to the UK, we're also now taking steps in terms of how to make that more profitable with the restructuring program. We are clear about when we're going now into Germany, into the next step, that we are focusing on one city in Hamburg to balance also the investment exposure.
How do you see the competitive environment today in your core markets versus some 5-10 years ago?
And I think I think I mentioned that, but if you look at 5 or 10 years ago, the competitive landscape was completely different in a way. Now we talk Stockholm, but if I take other cities outside, let's take up more north as an example. We were more or less alone with a store in our competitive landscape. Today you have 5-6 other competitors in the same city. So it's I would say that the sales space for the consumers to choose from has more or less more than doubled. And in this period of time, I think we've balanced and we've handled that increase in a fairly positive way.
Okay. If I turn to Germany, now you have a store there and a second one next week. Why do you think it will be a success market for Clas Ohlson, and what do you also think differs the German market versus your other markets?
I think every market is unique. If I just then come back to it, we can take Finland as an example. We had a somewhat softer start in Finland, and now you can clearly see the development we have in Finland. So you have uniqueness in all markets. We are very pleased to see in terms of the focus we are putting now in Hamburg. I think also, as I've reported today, in terms of some of the indication we're looking at that has a positive start. So we think the German market fits very well into the Clas Ohlson concept. There are no one similar to Clas Ohlson. We are fairly looking at the city development there. And also that's kind of the comments we've had when we open up now as well, that they are really pleased to have this kind of range very nearby. So we have a positive view about Germany, particularly than Hamburg, and that's where we started. I know in all of that's theory. That's why also now we're up for proving that. But we are focusing very crystal clear in terms of Hamburg, and we're making one impact there as a start.
Online business seems to take off well. How do you view
Sorry, what did you say?
the online business?
Online,
seems to doing good or growing from perhaps low levels? I mean, in the past, obviously, this impulse buying in stores have been important for Clas Ohlson. Correct me if I'm wrong. How do you view that risk for online taking off and taking traffic from your stores?
No, but I think we also have impulse buying also on online, but of course that's up to us now to merchandise equally good as we're doing in the store, and we merchandise online. But I think in terms of, I think you need to view online as, and we are clearly doing that as a these two channels are working very, very nearby and very close by. It's the buzzwords in the industry, if it's omni-channel or if it's a seamless experience and so forth. But it's really, if I look at how customers is working with our online today, with the Rupo effect, as we call it, when you're researching online and purchasing offline, is really large in our concept, as we're also located very nearby you. So I think the combination of the two is important. We are pleased to see that the combination works really good, but also that we also more and more trading online, and we still, we have really healthy ticket values online, and we continue to grow that channel. But we need to work equally good in the store. We need to work on how do we merchandise online, so you also are able to lift up all these smart, practical products that you tend to see when you walk around in the store. We need to be able to do that, and of course we can do better on these areas, and we are working on that. So I think, but the channels need to work together, and I think that's the key thing.
Cool. Should we open up for some questions from the floor?
Yes. Hi, Niklas Ekman here from Carnegie. Can I ask you about the expansion target? You are revising from guiding on gross expansion to net expansion, and you're setting a target of 3 to 8 stores net. And you already have contracts for some 15 stores. You have 7 UK closures. So you are in the very high end of that range, and you're still indicating more stores in the UK. So what leads you to give a low number of 3 stores for this year? Are you looking at significant additional store closures?
No, it's a fair comment, but I think it's pure mathematics in this, that we had a guidance early on, and then when we now have announced the restructuring program in the UK, of course it becomes more relevant to guide on net store. There are no other plans on closing any other stores, but of course if you take that pure mathematic scale, you get to these numbers, 3 to 8. So the plans are there. We guide every year. We tend to be in these in the brackets of this every year, and we also believe that we're going to be that also this year. I think we'll be on the higher end, as you're pointing out, just based looked at the contract. But we're also not specifically signing a new contract just for reaching out to some kind of guiding. So for us, it's what's most important, if it's the right area, if it's the right location. But we are in the ballpark there where we are guiding on.
But in general, you're not looking to, maybe now with over 200 stores in the Nordics, you're not in a position where you're looking at closing selected stores?
No, I mean, if you look at the Nordic, the model that we have in the Nordic is healthy. We are having profitable stores, but of course you should never say, if it happens that you find stores that is not working, of course we will not do anything differently than look at that, of course. But there are no come back to the new guiding in terms of net store. We think it's more relevant to look at, because in the end of the day, it's the net number of stores that is interesting for you. So we have changed that guiding, but there are no other, you should not read any other kind of plans around that.
Okay. Can I also ask on the gross margin, you and the NOK or FX effect in general? You signal here that you had a quite negative impact this quarter because of delayed hedges. Is this the worst quarter for you in terms of currency effects? And I mean, judging from the NOK rebounding, we're going to see considerably less negative currency effects in the coming quarters, or is this something that will prevail for another few quarters before we see margins stabilizing?
Well, I think if you can help me in terms of where the NOK would be, I think it would be easier to answer that. But of course, it depends on. But I think it's pleasing to see the NOK is going in the right direction. But you also see, and I think it's fair to say, we have some lead time going through in the system. So you saw that when we also had some changes early on the NOK, and that took some time. And even if it now starts to strengthen, that you still have the same kind of lead times. But you have also more instant lead time on the NOK versus you've had on the dollar, and you see part of that. Then if I just look at the graph, if you remember that part. We have hedged, as you know, every 6 months, so you can easily calculate also to see what if the hedges are positive or negative. And if it looks as it looks right now, of course, they will continue to be slightly negative as I see it. So we will see when the numbers is out and when we see the currency as well later on the months to come.
Okay, good. And can I just ask you about the German startup cost? I think you specified this to around 15 million last quarter, but you didn't specify it.
No,
now.
but that's correct. But it's part of the cost, and obviously we were when we guided that we had opened the store and we were fairly confident in terms of the levels. So it's actually more or less on what we guided on.
Excellent. Thank you.
With Nordea. I had first a question on the gross margin here, where you say that you will maybe take steps to mitigate the negative effects of the Norwegian krona. Maybe if you can just a little bit elaborate on that, and also in light of the recent strengthening of the Norwegian krona, what is the need for doing that, and what are you planning, and etc.
No, I think the same as we are looking at, and we do that in each market. First of all, we need to follow the market. We will never compromise on our price position as of a start, so we are following this very closely. And then, of course, it's up to us also to work on the sourcing efficiencies and efficiencies in general, and the sales mix as well, that we're actually having positive trends on. It doesn't go immediately, but we have positive trends on this. But you're right, we are maintaining and really being hands-on in terms of how the market is developing and following that. It's a very competitive market, but we also see clearly that, of course, when you have these impacts, it impacts everyone. So we're following that. If we now see that the currency will really strengthen, which we think, of course, is positive, that will be supportive in that perspective. But long term, and I think my comment, what we've done with the dollar, so we talked about that at the time, and I think we've proven in a way that we've been able to balance that, and I'm sure that we will be able to balance this also for the Norwegian krona, but it will take some time, and you have some short-term impact.
Just also understanding the inventory build-up in this quarter. You mentioned campaigns and maybe seasonal fluctuations. This not you expect to get back to your normal rates, so to say, or your historic rates?
No, we build up on more stores, obviously, but of course we are working on the inventories frequently, and you get some of these variations when you in this case we had also some earlier building in or some earlier coming in containers, which I think also with some of the discussions currently out there is also. We're also pleased that we have that on our inventory at the moment. But of course, we continue to work on to have efficiency in our inventory as well.
All right, thank you.
My name is Niklas Färm. I work for SEB. Can I go back to Germany, please? I would like to, because it's a newly started business, can I ask you, what are your pricing strategies in terms of like-for-like items in Germany? I mean, it's a notoriously very competitive market. And what's the mix, the average shop floor comparison to the Nordic region? And also, is there a different share of private labels in your German business compared to the Nordics, please?
Pricing strategy is very clear. It's the same pricing strategy as we have in the Nordics. We are going to be very price competitive. And when we looked at the market, and I think I said that in the beginning, and we see that also now, that the model that we have works fine. We are able, with the range and with the mix that we have, to be able to have healthy margin while still being very price competitive in the marketplace. Then, of course, and I think I mentioned that when in terms of the mix effect for us, and I even said that earlier on, that private labels is an important part for us. It becomes, we are having a unique, we have put a lot of efforts in terms of making the design and the quality, coming also from the Swedish kind of design or the Scandinavian design in that perspective. And we've hoped for that, but also seen that, which is positive, that the customers is also very much appreciating that. So we, if I say we've had a very, very good start of private labels in this market, then I guess that gives the signals at itself.
Indeed. Going back to the full fiscal Q1s, on a group level, has the share of private label sales increased compared to the same period last year?
We, if you remember when we did the last year, when the new range came out in some of the areas that we developed, we saw even in second quarter and the quarter three a jump up from the mid 25, 30 to almost 30, and we've continued on that journey. So we are in the range of 30 and continue to have positive development, not in the jump level, but we are now up at the 30 levels.
So that implies that most of the gross margin decline in the quarter is actually due to hedging and currency. Or is there anything else you'd like to point out?
No, we've been extremely clear on that, I think.
Yeah. Can I also ask you, if we look at the like-for-likes in the period, down about 1%, how does that actually break down into footfall and average tickets? What's the composition of that?
No, but
and also, please, if you could compare that to the current trading in August, is there any particular change in store traffic?
I think in general, I must say the work that we do, if we're now talking about the stores and the staff, and they are doing a fantastic job in terms of taking care of customers. So we're seeing a healthy trend on conversions, but they are on the smaller levels. You're not changing that overnight. What have happened in this summer is very much related to traffic. Again, coming into the summer months variations, that we've seen traffic change, traffic patterns that has been very much different versus last summer. Now, then I'm not one to talk about that, because you never talk about what are the reason for summer variations. But as we all know, we are also located in the city centers and in shopping malls, and it tend to be so that you're spending more time on shopping malls when the weather maybe is not as perfect, and so forth. So there are also other variations that could happen in between the different months. But to point out directly to your question, it's very much related to traffic pattern.
Final question. If you look into August trading, would you agree that there is actually one Saturday trading day less in August this year compared to last year. Would you agree that there's a negative calendar impact as well affecting the reported sales in August this year, please?
No, I would not. I think it's a slightly positive calendar effect for us in August, as if you look at it, we are more related to Sundays in our perspective due to the Norway non-trading in Sundays. So it's a slightly positive effect.
Thank you very much.
Yeah, if I continue on the gross margin in the quarter, perhaps you touched upon a little bit on the private label side, but in the previous quarters you mentioned that mix has been an important, say, supporter of your gross margin, but was not that the case in this quarter?
Well, it's not that it was such of a big impact as I think we talked about here. The large variation versus last year is very much related to the Norwegian krona in this quarter. The mix influences in many things, in many areas. You have a mix between countries, you have a mix between categories, and a mix within the categories in that. If you look at that balance today, that has not been a major change versus that has impacted the gross margin. It's a Norwegian krona.
Okay. Do you see more room for the mix improvements going forward?
Mix is a constant work for us, where we are looking into how we can meet the customers in best possible way, but also how we can work on the mix in also a favorable way for Clas Ohlson. That will be a constant activities for us even. It's been historically and also going forward.
You touched upon the cash flow in the quarter. You had some inventory build up, or higher paid taxes and so forth, but it was a sharp decline, and I get to a negative free cash flow in a quarter that normally is very free cash flow positive. And any comments on that? Or?
No, I think there's been, to a large extent, there's been inventory. I know Göran, our CFO, is here if you want to make a comment more specifically. There are also other, as you see in the report, other elements that has been a change. Maybe you want to go more in detail to that, Göran.
Yes, I can do that a little bit. I mean, it's more details. As you say, we have a bit higher paid. Should I come in the middle? A bit higher taxes that varies between quarters. We also have a bit higher investments and also repurchase of own shares, as you can see. So it's a lot of components that ends up with a decrease in cash flow.
But the higher pay tax, is that, will that continue, or was it a temporary thing here? Or?
No, it varies between quarters, and in the end of the day, we pay the taxes that we actually have in the P&L.
Okay, gotcha. Thank you. Do we have any questions from the webcast, perhaps? Or?
From the telephone conference, operator.
Yeah, operator, do we have any questions from the webcast?
Thank you. As a reminder, if you do wish to ask a question, please press 01 on your telephone keypads to ask a question. Okay, there appear to be no audio questions at this time.
We'll let the floor ask some questions.
Yes. Niklas here from Carnegie again. Can I just come back to the like-for-like development? Obviously, this quarter with -1%, there are some clear calendar and timing effects. But if you look year to date, the calendar year to date, generally the like-for-like is weaker. You are looking at kind of a flattish like-for-like after a period of 2 to 3% growth. Are you seeing a general slowdown in the market? I mean, when you looked at the statistics here, it seems like Norway and Finland are improving, but maybe Sweden is deteriorating. Is that the kind of trend you are seeing, or any particular reason why we have seen a weaker like-for-like in the first 7 months?
No, I think when you're saying calendar, you mean from January, then if I understand you right.
I mean, in this particular quarter, I think there were some negative calendar and timing effects. Comparisons also varied.
No, well, not really in terms of course, if you look at, of course, we are following and following the overall consumers and the overall trend in the market. We are, as you know, we are not as sensitive for high-ticket items, but if you see general traffic patterns that changes, of course, that impact us in some way. I think coming back to markets, Finland has been down to some challenging time. We've been able to see that despite that we have grown and we are to continue to take market shares, and pleased now to see that, as you're pointing out, Finland is taking steps. Norway was a challenging time if you just look back, and we had the spring we were wondering where it was going. It seems to be picking up now, which is pleasing. Sweden, yes, we've seen a very positive overall trading environment in Sweden. Seems to be dipping a bit now. We'll have to follow that and see how it goes. But in that perspective, I think if we look at our position and what we are offering to the customers of the small practical solutions on an everyday basis, I think that kind of consumption will still be fairly stable, even if we could be influenced by traffic patterns short term.
Okay, and there's no tangible negative impact from the UK closures on your like-for-like in this quarter, for instance?
Well, I think being clear on that the uncertainties around Brexit and the uncertainties around, in general, in the UK environment has not been positive. So we are having impacted by the store closing program, but we also is noting a softer market, excluding then, which I have to lift out, that the smaller new stores in the London area is actually trading better and better, but they're also smaller stores. So the trading environment in the UK is not as positive.
Can I also ask you about the online sales? Because you used to be reporting this separately, and while you were doing that, it was constantly declining to a level of, I think, less than 2% of sales. Since you stopped reporting,
It's constantly increasing.
It seems to be constantly increasing.
So that's the magic trick.
Yes, exactly. So I was curious, is that ratio today significantly different from the below 2% that it was when you were reporting it?
Well, of course, that's going to be a tricky question for me, because what's significant for you maybe is not for me. But clearly it is a clear improvement in that area. But I think also I'm coming back to why we are not. We want to put focus on the right thing, because of what we see also our e-com platform is doing is supporting extremely well the business we have in the stores.
Okay, good. Thank you.
Yeah, it's Nicholas Farm with SEB again. Just meant to ask you, sorry if I missed this, but Hanjin has obviously went bust. So I'm just wondering if you have any containers floating around outside of Rotterdam somewhere.
Yes, but not too many.
Okay, fair enough. And second question would be to you, Göran, perhaps. There's an upcoming change in reporting for store leases that will come in place by 2018. And I'm just wondering, what's your best estimate today of your sort of net debt position? And will you be moving in advance your planning ahead of this change, or will you just wait until it actually happens? Thanks.
I think we will wait until it actually happens, and when we have to follow that new guidelines, and it will have an impact, of course, of our equity asset ratio, and it will, as you can see in the annual report, you also have information about the leases we have. So there you can, calculate to see how large it will be, but it will have quite an impact on our equity asset ratio.
And final question, I had the opportunity to meet with some sector peers earlier this week discussing sourcing in Asia. And I think the general conclusion, sourcing right now is quite advantageous for the retailers. Would you agree?
Yeah.
Yeah, thank you very much.
Yeah, let me continue. Speaking of sourcing, in addition to mix and so forth, you have been successful driving supply chain efficiencies and sourcing cost perhaps in the last few years. What more can you do to improve that? You talk a lot about working with continued improving efficiencies.
Which is a constant theme for us, and I think we are now also expanding more. We have had a large focus on certain countries. China has been an important market for us. We are now also expanding into more markets where we also see opportunities in Asia to continue to improve sourcing. We are adding more resources and more staff in this area. So of course that is now we made it kind of a jump when we started with this our own offices and started to take out costs out of the system. Now it's more gradually improvement. Which of course, when we can control the full pipeline, which we do, particularly on our own labels, and when we see then you have a double effects of you're growing your private labels, but it also can improve the larger you become on that area, the more efficiency you also get in sourcing. So over time, that's strengthening our margins.
And lastly, I think we have maybe 30, 45 seconds left. Your EBIT margin target, about 10%. How will you get there, and when will you reach it?
Well, I think it's all about driving the platform that we have, driving the sales that we have in the current structure. But we also are clearly in terms of the taking steps from our international parts that I think we've announced clearly. So that will be supportive for us to drive towards our long-term EBIT margin.
Thank you.
With that, I think we conclude the Q&A session. And again, thank you for coming. Thank you for listening. And just to be sure and to be clear, the store is open for you if you want to shop. We have a lot of good news. But again, thank you very much. Thanks.